Are you looking for a great Canadian and a great US stock to add to your portfolio right now? If so, I'd suggest you stick around because that's exactly what we're going to be covering in today's video. What's going on, you guys, and welcome back to the channel. If you're new here, my name is Brandon. As always, we do have our Investing Academy. It's that first link in the description. If you're a beginner to the stock market, you're looking for courses and training and whatnot. But today we're back with another episode of 2 stocks to buy right now. And the format that I did for the last video, about a week or so now, where we covered Tencent and New Flyer, I really enjoyed that style of video because what I did was I picked one company that was performing well and hopes to perform better going forward, which was Tencent. I also then compared that with a company that was kind of beaten down, a company that hasn't done so well, more or less of a value play, let's call it. And I really like the contrasting views. So we're going to be doing that again for this video. We got a US stock that we'll cover first, followed by our Canadian selection. Both of these stocks, FYI, I picked quite tactically given the current state of our world. With everything that's going on, we have cases spiking again, we have elections coming up, a lot of uncertainty, and that's why you'll see that these stocks are relatively safe, but we'll touch on that as we get deeper into the video. If you enjoy these stocks to buy video, all I ask is that you could drop a quick thumbs up. That really does help. But let's dive on into our first selection for today. It's the US stock, and it's the company Costco, ticker COST, Cost. And this was one that has been on top of mind because I quite recently renewed my membership. I had been a member from a number of years ago when I first moved out, and I found it was just too bulky, too much stuff. It still is too much stuff at times for a family of 2, not including the pets. That would be a family of 5. Anywho, I just signed up, and while I was there, I was just absolutely reminded of how powerful and how strong this company is from a business model standpoint, from the demand standpoint. It seems like every time you go, the parking lot is just packed. The warehouse is packed. The lineups are packed. There's so much product to ship. And the numbers do really back that up. We'll look at them in just a second. But Costco is the stock that has done very, very well. By taking a look at this share price, I just pick here a 10-year period. We see that the stock is up over 500% to where today the shares are trading at $357. This is, of course, USD on the NASDAQ. But that to me is just a clear depiction. It's just a clear representation of how strong this business is. If we take a look at their recent quarter, and we'll get into some of the more fundamental stuff in a second, Costco reports fourth quarter earnings and fiscal year 2020 results. You take a look across all of their categories, US, Canada, and international, because FYI, they do have locations internationally. Net income for the year, up 9.2% in aggregate. You see strong performance pretty much US, Canada, international. You do see as well, which I don't have highlighted below, but some very nice e-commerce growth, up 50%. This is obviously a major channel, a major platform for them. I know that I've looked at some stuff online, their e-commerce. I haven't bought, but just used it for looking. It does just pretty much display with kind of what I saw when I went there, that there is just such a demand for these memberships year after year. This is a chart that I found online that documents to 2019, 98.5 million cardholders. These are the members on annual subscription. If we looked at 2020, which is not displayed on this chart, we'd see that Costco has over 100 million active cardholders, 100 million active subscriptions worldwide. And that's, of course, a massive number, a very key metric for a company like Costco, because if you're not familiar how Costco works, and we actually have a couple fun facts for this segment. The first fun fact is a little less known, but the second one I think will be new to a lot of people. The first fun fact is Costco's business model and what makes it so unique. They make pretty much all of their money through memberships, and I'm talking pretty much all of it. So you wonder why Costco is able to sell their products so cheap, why there's not really many markups, and why you get really good prices on their bulk deals and products, is because quite simply, they'll just pass that straight through to the consumer. They'll pass that straight through to us. Very slim markup, if any. Often there's actually no markup. Where they make their money, however, and really where all the profit drives for this company, is in these memberships. These yearly recurring memberships that they can just charge year after year after year. One thing about Costco is they do have a very, very high retention rate. I believe it's up at around 90%. Historically, it's actually been higher, but very, very high retention rate. Once you start shopping there for your family, once you start getting the hang of the routine of things, very odd that you'll switch out and change things. Even if, let's say we go into a recession, for example, the odds of canceling your Costco card, in my opinion, are quite slim. Fun fact number 2 about Costco, and I'll say leave a comment down below if you knew this, about the Kirkland brand. The secret behind the Kirkland brand, and what makes it so unique, they often sell very, very good product for a very, very low price. If you've ever actually tried any of the Kirkland stuff, it's actually very good product. And that's because in almost all cases, what they're actually doing is they're getting the big brands. They're getting the powerful, proven manufacturers and suppliers to create the exact same product, but under the Kirkland brand. And if you're interested in a fun read, I'll actually link this article down below, which I really enjoyed reading. I can't take credit for this, but it goes through a bunch of comparables that you'll find in Costco where there is actually a big brand name company behind the Kirkland brand. You take, for example, Starbucks coffee, where they say here you'd get the Kirkland blend for around 30 cents per ounce, whereas the coffee branded as Starbucks, 71 cents per ounce. Dog food is another example. Huggies, you have the Kirkland comparable. It's the exact same producer. It's the exact same companies. You can get the boxes $10 to $12 cheaper if it's under the Kirkland brand. Jelly beans, batteries, there's really quite the list. But of course, one that we have to mention if you didn't notice already, Grey Goose vodka. The Kirkland vodka is, in my opinion, one of the most easily comparable options, and it always looked to me like the Grey Goose bottle. Always kind of tasted like Grey Goose. But there you go. You get it for a fraction of the price, because the way that brand operates the way Costco operates is that if a company wants the shelf space, if they want the exposure which Costco is happy to offer, rather than offering it, let me rephrase that, they'll still offer their own product at their normal price, but they can also they'll set up a deal where they can brand as Kirkland. They'll offer it for significantly less, and it's the exact same product. So they are taking a hit on margins, but it actually makes sense for the company, seeing how they can get that extra shelf space, the extra exposure. It's just a very fascinating business model. But that is just something to keep in mind. The Kirkland brand is a very, very good quality product. I actually read somewhere they have to make it 1% better than the real product just to make it that much better. Again, go check out that article if you find that interesting. But it's all about just having these customers coming back and paying for more memberships, because that, at the end of the day, is how Costco's thrived and how it's continued to done so well. One of the negatives, or one of the cons that you could make for a company like Costco, is that there will be, and there already is, some increasing competition. You take something like Walmart Plus as a good example of this. Personally, for me, I don't really buy into that argument. I think that Costco has actually developed such a strong presence that that in and of itself stores value. That in and of itself is invaluable. I think that people love going to Costco because it's Costco. I'm a shareholder of Walmart, but I have to admit, I hate getting groceries from Walmart. I don't know if it's just my area, but not groceries, I should say vegetables in particular. If you go near the end of the day, it is just the worst pickings of vegetables. They're always rotten. The other stuff is good. The packaged stuff is always reliable and always cheap. But in terms of the two different businesses, or the two different retailers' grocery options, I do put them in a separate category. And I think consumers do see that as well. It's much more family oriented, obviously very unique in the bulk, and their operating structure with the very, very slim to none margins. Overall, I just think Costco is a great, great business. I think something that we can take from this little segment is that when you look around in your daily life, you will come across all sorts of great businesses. This is one of the primary rules. This was, I think, Peter Lynch in his book talks about just identifying companies that you're a consumer of, that you actually utilize on a day-to-day basis. And I think Costco is a great example of that. The share price has clearly done quite well, and ideally I'd love to see a pullback. I'd love to see more opportunities to buy into this company, but you could have made that argument a number of months ago. You could have made that argument a number of years ago that you're just waiting for a pullback, but great companies tend to continue to do well. So this is our first company for the day. It trades for $358 as I'm looking at it right here. It does pay a small dividend of 0.78%, but rather meaningless with the very nice share performance, Costco is the first stock to buy right now. Moving along into our second stock for today's video, which is our Canadian selection. And this very well may be the shortest segment that we've done on a stocks to buy video since this channel started up. I hate to do it and I hate to beat a dead horse, but it is a stock that I'm kind of liking at the moment. It's the company Canadian Utilities. And I know we've covered them recently over the past number of videos. I feel like I've done a full coverage on them on at least 2 other videos, so I won't be going too deep into it, other than the fact that the shares are down about 25% off highs. Today we're looking at a 5.34% dividend, so over a 5% yield, and this to me is really the most reliable yield that you could find here in Canada. I'll go out on record and say that it is the most reliable yield that you will find here in Canada, because if you take a look at the history, this is of course the company with a 48-year streak, the longest active streak of increases in Canada. And 1 minute background, this is a portion, or this is a company under the ATCO umbrella. We also covered ATCO recently, which is another great stock, but this is the Canadian Utilities Energy Company. They of course have so much of their money, their cash flow, their earnings, their profits. It comes in such a reliable form because their rates are regulated. You actually can take a look at the percentage of the amount of rates, the help they get in terms of the reliability on these rates. You do see a little bit of long-term contracts here, but 90-something% is just such a reliable way of making money. They're actually expected to grow their earnings, I read here, 9.3% in 2021 because of exactly that. And because they have such reliable income, they're able to pay and raise dividends year after year after year, which is why we've seen such a strong increase. My reasoning behind selecting this stock for this video, as I touched on at the top, was that it's almost a carefully selected stock in that it is a defensive play. This is not a stock that I would suggest for an 18-year-old or for a 20-year-old who's just getting into the market. I know we have a lot of ages of viewers here. We have 30-year-olds, 40-year-olds, 50-year-olds, 60-year-olds, and this would be a very great play for somebody that's a little more conservative and a little more defensive at the moment. Because as we stand today, I was reading some of the news articles this morning. We have, of course, coronavirus in the White House spreading amongst all of the big politicians. I read over that in Ireland, they're bracing for a lockdown of a second wave or a continued lockdown period as the virus continues to spread. Ontario was planning, or they have already stopped the gathering of sports teams. They are doing a sweeping lockdown, which I didn't look into much more. But if we are headed for another lockdown, which God forbid, I'm really hoping that doesn't happen, or you take elections coming up, regardless of the way we want to spin it, there is a lot of uncertainty and there's a lot of things that could have the market shaken up and, in my opinion, have things heading south very quickly. Of course, if we go into another lockdown, a company like Canadian Utilities really benefits because they're a utility company. They don't need people coming to visit their parks like a Disneyland. They're not a restaurant for that matter where they need people to come in and dine in the restaurants. This is just one of those ongoing, very, very protective companies. And in terms of the metrics, if we look at take even the PE, for example, a PE ratio of under 15, it's just a relatively cheap stock. And with it down 25%, I do think that it is one of those good times to buy. It wouldn't be a stock for me personally, given my risk tolerance, given my scenario. But if you feel that this is one for you, if you put a high emphasis on income, if you put a high emphasis on dividends and a safe stock that maybe wouldn't drop as much as the broader market if things did head south, this could be a really great one to look into. The stock today trades for $33.08 Canadian. And again, it pays the 5.26% dividend. So guys, those are my 2 stocks to buy for this video. If you enjoyed this video and if you like the series, you should really subscribe. Or first of all, you should give a thumbs up on this video if you did learn something new, if you enjoyed it. If you like the stocks to buy videos and you want to learn more about different stocks, hit that subscribe button because we post this video seemingly about once a week, maybe once every couple of weeks of just stocks that I'm eyeing. If you are new to the stock market and you're looking for courses and training, for example, you're not so comfortable with all this, you are either building up your portfolio or you haven't even started, you can click the first link down below to learn about our Investing Academy. We have a community where we are helping Canadians go through the entire process. But As always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.